Joining me now is Pierre Lassonde. He's the chairman of Franco-Nevada. He's also the keynote speaker here at John Duty's Gold Stock Analyst Day here in Fort Lauderdale. Thanks so much for being with us, Pierre.
It's a pleasure to be with you.
And Pierre, what an introduction that John Duty gave you. He basically said that you brought back legitimacy to gold investing when you came out with your book. What an introduction.
Well, I think that was very kind of him.
Pierre, my first question to you today is about the price of gold. You started off your presentation looking back at 2013 at how the price of gold was suppressed, and you said that the two main culprits here were ETFs and the COMEX. You said the COMEX had started off long 800 tons of gold and ended near zero. How are we set up today?
Well, and then the other piece of that equation is the ETF itself, which started long about 2,600 ton and down to about 1,200. So between the two of them, essentially 1,700 tons of gold came out in 2013 vis-a-vis the year before. And the gold price sensitivity is $30 per 100 ton. So for every 100 ton of oversupply, if you want to the market, the gold price will go down $30, everything else being equal. So essentially that, difference is 1,700 ton, take $30 plus or minus, it's $600. And that's why we saw the gold price come down so much.
Okay, now Pierre, you said that yes, you are bullish, but you're not necessarily looking for 1,600, 1,800 gold this year.
No, because even though that oversupply is not going to reappear in the market this year, I don't, like the COMEX will rebuild at this point, and then the ETF we have actually seen the bottom. Right. So, but at the same time, that demand for, all of that demand for the surplus gold is at a price. So if the price starts to move up a little too fast, you're going to see that demand start to evaporate. So I would think that the gold price is more likely to consolidate in the $1,350 plus or minus $50 for this year.
Pierre, you also mentioned something that could hurt gold is if we were to see a recession in China. Is that a realistic reality?
Well, as I said in my presentation, the gold is moving east in big time. And all that supply, for example, last year, the East, which I call China, India, Vietnam, it took almost 2,700 tons of gold vis-a-vis the West at 570 tons. So it's 5 to 1 for the East. So if something was to happen in China, like a recession, it would definitely hurt the gold price.
Now, you briefly mentioned mine production. You said that you expect it to remain flat for the next 5 years. Why wouldn't that help gold?
Well, I think it will. We've seen a fair amount of increase in production over the last 5 years that was essentially due to the price itself moving from $500-$600 to $1,300-$1,600. But we haven't seen like really high-grade discoveries. So I think that now the mine managers have caught religion. Like the shareholders have given them some serious issues, like the gold price, the stock price were hammered in the last 2 years, and so now they're going to manage to return money to shareholders, and because of that, I think you're going to see production essentially flatten out for the next 5 years.
So would you say it's a good buying time for the mining stocks, and if you had to choose between exploration companies, juniors, or the majors, where would you put your money?
Well, I think it's a good time, and let me go back to when the gold bull market started in 2002, for example. Gold bottom in 2001 at 250, and then it started around, okay? Mm-hmm. The best performing asset actually was not gold itself. It was the intermediate companies and then the senior companies. And then the juniors, joined the party actually later, much later. So if you ask me now, I think we've turned a corner, and I think that the best performing stocks or the best performing asset in the gold space are going to be the intermediate companies that are producing and that have growth. And then the senior companies, which are flat on production, but they have real production and they're going to make real money. And the third one, I think, will be the juniors, because it's been so hard to find really great assets that, and the public has been burned so badly that I think they're just going to tiptoe back into them.
What do you think we need to find those good assets again? Do you think it's a lack of geologists? Is it lack of money? What is it?
I think it's a lack of technology. The mining industry has just not produced, has not spent enough money on R&D, like the oil business, for example. And so it's not because the deposits are not there, they exist. I mean, I always give the example of Hemlo, 20 million ton of 1 ounce gold, which was found under the Trans-Canada Highway in 1982. Okay, so don't tell me that like there's not another Hemlo somewhere in Canada, which is like, you know, the second largest land mass in the world. They're out there, but we just do not have the technology that we should have.
Finally, Pierre, you also act as a director of the World Gold Council. An issue that's come up is India and whether we'll see those restrictions lifted on their import tariffs there. If they are lifted, could that help gold?
Very little. I mean, India has a history of gold smuggling, and once the regulations were introduced, it took a few months. The smuggling routes were reestablished. You know, when they lift, what difference will it make? $5 maybe, but I don't think you should count on it to lift the gold price anywhere.
Finally, I'd like to clear the air with one question that was asked regarding Germany repatriating their gold. And this is a question I'm often asked. I'd like you to set the record straight there, because a lot of people think that there's some funny business behind it and whatnot, but I thought your comments were interesting.
Yeah, I think that the conspirationist, if you want, crowd, delights in saying, well, it's going to take 10 years, something that should be done in like a few, but, like in a few weeks. And really, it could. But what they're missing is that Germany, and particularly the central bank in Germany, is very, very touchy on appearances. And they just don't want to, ruffle anybody's feather. And they certainly don't want to appear like they're impatient to get their gold back for any reason. They don't want the credit of France to suffer because they're getting 350 ton or 376 in this case of ton back. I mean, it's meaningless in the scheme of central banks. It doesn't represent a whole lot, and they're really asking why is everybody making all this fuss about not a whole lot, and that's their view.
I like how you said it, that central bankers are really not thinking about gold.
No, they, having had the honor of meeting a number of them, I can tell you they spend no time whatsoever thinking about gold. So, we think that they do, but they don't.
All right, Pierre, before I let you go, just final thoughts for investors watching.
Well, I think that now's the time to get back into the gold stocks in particular.
All right. On that note, Pierre, thank you so much. It was an absolute pleasure to interview you again. Thank you for being with us.
Thank you very much. Pleasure.
And thanks for watching our coverage and our interview with the keynote speaker here today, Pierre Lassonde. You can email us any comments or questions at newsfeedback@kitco.com or follow this conversation on Twitter @Dingala Kambone. Thanks for watching.